Hello and welcome to the Stock Planner channel. Today we're going to talk about Regions Financial. It's a bank. It's a Southern bank. It's a regional bank. It just reported earnings. They weren't that bad, but we had a long red bar. The market didn't like it. The indicators are showing that this stock, after a bullish trend, might reverse itself for a little while. I like the stock long term. This video is going to show you a possible short-term play going short in Regions Financial. If you're looking for a short play, especially in this overheated environment that we're having right now, and especially with the antsiness that people are having with banks, they're not all that positive. Regions Financial, Huntington Bancorp, and PayPal might be areas and stocks that you might want to look at in the financial sector. I use an algo written in the OmniBroker, and it's saying that those three stocks have a possibility of going short. We're going to talk about Regions Financial. Stay tuned. But first, I'd like to say, look, I'm a swing trader. I'm looking for tops and bottoms, possible reversals, and then capture the trend in between. So I'm actually a trend trader. I'm not your financial advisor. So it's important to do your own due diligence, learn it, win, pick your some indicators that you like, learn to read some charts, especially if you're a swing trader. That's a lot of it's technical. Learn to do some basic fundamental analysis. You don't have to do a lot. You don't have to be an expert. You just got to know what you're trading and learn it and win for life. But it's important to do these things on your own and do not take financial advice from anybody on the internet, including this guy. So without further ado, let's get started. I hope you liked the video. I have a Discord chat and I have a free zone with lots of information and some trade ideas. Also have a paid area. If you want to support the channel, this is how you do it. And if you go to the intermediate, I have the 3 indicator strategy. I'll explain that in a minute. But if you click on the link, you'll get the results of an algo that I've written in OmniBroker. And if you go to the bottom, you'll see that in July there's about 8 or 9 singles. This algorithm is written so that you won't get a lot of singles each month. But on Friday, we got 3 different singles: PayPal, Huntington Bancshares, and Regions Financial. And those are all financial stocks, and they're all saying go short. This column is the cumulative value for the last year or so. As I said, this is a algorithm based on the MACD, the RSI, and the stochastic RSI. And if you run the back test from last year, June of last year, it gives you a good roadmap of trade signals that you ought to look at for trading if you don't want to have a lot of signal each day. And if you start with $100,000, your net profit is about 22%. That's better than Warren Buffett's doing right at the moment. Again, this is a back test. When you actually trade, you're probably not going to achieve. It's very hard to trade a back test. And if you take in account of only the amount of money that you have at risk at any one time, this goes up to about 50% because you're in and out of trades when you do swing trading. The average number of bars or trading days is 15 days. And the average profit is $243, and the average loss is $185. In other words, you're winning more than you're losing, and your percentage is about 60%. 60% win rate. Is that good enough for you? Or do you need more? With a good risk reward and a positive above 50% win rate, you have a winning strategy, I believe. Anyway, the algorithm, whether you believe it or not, is predicting and saying go short on these financial stocks. Now let's look a little further in Regions Financial. Again, this is an OmniBroker, an algorithm, and all I need to do is double click and go to the chart. And this will be the same chart that I use in TradingView. Now the 3 indicator strategy is when the RSI is below the 30 or above the 70, and the stochastic is below the 20, and come back around. And these are 2 occasions right there and there. But the RSI was not below the 30. And the MACD is below the 0 line. When they all occur together, that's 3 indicators that say, hey, maybe it's time to go long. And we had that situation in this area here. And we did not have it here. So right here, we had some buy signals. And they stayed true for 2 or 3 days, or you can add some more if you wanted to. And then immediately it went down, but then we had a nice rise up. and that would have been good profit. Now, the 3 indicator strategy is we have a situation where the RSI is above the 70, it came back around right here. The stochastic is above the 80 and came back around. That's a trigger. And the MACD is well above the 0 line, and we actually had a crossover. That's good too. When they all occur at the same time, or within a few bars of each other, that's an indication, according to the algorithm, to go short. Now, this had a big red bar, and I happen to know they put out a news article that they're increasing the dividend. So they increased the dividend, and the stock went down. I think we need to look at this a little further and understand what Regions Financials is. But the algorithm is saying, hey, look, it should go short. If you could find a strategy that would say, hey, look, as long as it stays below 20, maybe we can take a profit. And the fact that this is at a high that hasn't occurred since somewhere in March. You have to ask yourself, do you think banks are in good shape right now or bad shape? Do you think regional banks, this is what Regions Financial is, a regional bank, and it has good service, and it's very popular in the South. Are they going to do good or not good? Are they looking for an increase and go up? Or is it going to hang in this area or go down? I think that's what's going to happen. It's going to hang in this area, slowly go down or creep down, but hang in this area. And I'm going to look for a trade. If it all pans out fundamentally under $20, $20 to $21, somewhere I'd stay below that. I always like to start with FinViz. It's a free analysis scanner. It does a lot of things, and a lot of it's for free, but it has a lot of ads. That's why it's free. But if you're a beginner, this is a great place to start. And you can see that Regions Financial sort of in a range, and then it shot down. This is with the bank failure out in California. And then you can see that, and that's what I like about this for beginners, is it puts these nice little support lines and trend lines, and mean, when it's below the mean, the moving average, below the moving average, that you take a short, and if it's above, you take a long. Well, currently, this stock is above its moving average, 200-day moving average, and we had that long red bar. Looking at the data, it's profitable. It's profitable. It's optional. That's what I like, because I trade options. Shortable, go both ways, and technically it has a buy rating from FinViz, and the target price is $21.30. Currently trading at about 20. That's not a whole lot. It's just right up here, and that's a 1-year target. Some of the action things I look at on FinViz is the actions, upgrades and downgrades. It hasn't been anything recently, and it was a downgrade based on the banking crises. And here's that news article, increased to 24%, and then that stock dropped. And this is a Simply Wall Street article, and that's how I actually found the article, because I trade Regions Financial, and I use Simply Wall Street, and it came up. Let me show you that. This is Simply Wall Street, and there's a lot you can do with it for free, and I have a paid version because I do some deeper analysis. But you can see that the last 7 days it went up 4.1%, but over the year it's down by 4.5%. It has a market cap of $18 billion, and the ticker symbol is RF, trading at $19.72. Banking and banking-related services for individual and corporate, and it has a lot of banks in the South. It's trading, according to Simply Wall Street, at below what it should be. So they're saying it could be a good value. Earnings have grown, that's good, by 13% over the last 5 years. It pays a high and reliable dividend of nearly 5%. Sweet. And they just increased that. Looking at the snowflake, this is what I like to look at. It's this health of this company got all checks. That's great. It pays a dividend. It's undervalued, but its future growth don't look so hot. And it's a fairly new company. This is a pale green or yellow. These are competitors. They're more green. So you may want to consider those competitors rather than Regions. And that's up to you to look at that. I'm looking at Regions Financial because I think in the long term, because of their good customer service, I think it will go ahead and grow. I don't think it's likely, though, the next couple of years. I think banking's going to take a hit. And then once you have a portfolio of stocks that you're interested in, it gives you these news updates automatically in Simple Wall Street. The second quarter earnings are in line with what analysts expect. That's always good news for Wall Street, and usually for the stock. It has a current PE ratio of 8.4%. Now, if you look at this or that PE ratio compared to its peers, it would appear that Regions Financial is a little bit overvalued amongst its peers. And that bodes well for taking a small short, because value investors will look at a company like New York Community Bancorp because it's undervalued amongst its peers, or appears to be. When you highlight the Regions bar, you'll see that Truist, which is my bank, and other banks are in line with that, highlighting the next bar over with a PE range of 9 to 10.5, a little higher. You got JP Morgan, Bank of America, and other big banks. And these companies have a little PE a little lower than Regions. And look at this, Citicorp, which is going to have some issues. First Horizon, Citizens. Those might be attractive stocks to look at in the future, as their PEs are lower than Regions. I don't really have a concern here. The current PE for what it should be, yeah, it's fine. Current price versus its fair value. Now, this is looking at discounted cash flow or future cash flow. And they're saying if you use that model, its current price of $19.72 it should be, actually, when you add in the future value of this stock, it should be trading at around $41. And they're saying that's undervalued. And when people see that, the theory is that they'll buy this undervalued stock, and with the hopes that it'll go up to this value. Now, this chart is a little trickier. If you go back in time to somewhere in 2022, there's 24 analysts covering. That's a lot. The share price at that time was $21, and they're saying, hey, it should go to 26. It never got up there. Never got up there in 1 year's time out. They were off by a few dollars. And now, when it was down to its low in 2023, they're saying it should get up to $21.80 1 year out, somewhere in 2024. Well, it's at $19 now, and $21 a year out is not a whole lot. So I don't think the stock's going to move much over the next year. And remember, these are 24 analysts following these. These guys are getting to 25. These guys and gals are getting paid to do this. They went to school to do this. They studied at some great schools, and maybe they know more than you and I. Anyway, I have other things on my plate, so I have to rely sometimes and trust what they say, even though it appears on this pink line or purple line that they were wrong a lot. This is revenue. It's only growing slightly. I mean, you want this to be a little bit more angled up. And earnings is flatline. That bodes well, again, for taking maybe slow growth, no growth, or a little short position. I'm not interested in dividend. I'm swinging this stock. But it does pay a reliable dividend and very attractive, 5%. Now, this does not bode well for a short. In the last 3 months, insiders have bought shares. That's normally a good bullish sign. Well, you don't see this often, but 99.9% of the stocks are owned by institutions. I guess they're in for the long haul. And I do believe the stock is good for the long haul over the next 6-7 years. This company is not going anywhere. It's not going to go broke. Now, using another tool called TradingView, it's mostly free. In fact, most of it is free. And the rest of it's pretty cheap. It's a charting package. You can do watch lists, and also you can do screeners, stock screeners, and you can scan from a watch list. That's what I did in OmniBroker. I was using a watch list and running a routine against it. And the difference between that, OmniBroker, I can run a routine against a basket full of stocks, and generally the algorithm is run on only one stock in TradingView. That's the difference. If you want to run a routine against a basket full of stocks, which I do, and get a report, you'll have to use another tool. But this is wonderful for just analyzing one stock, visualizing it, and communicating with others. That's what I use it for. Region Financial, again, the ticker is RF. We're on the daily time frame, just like the other before. This is called the zigzag indicator. That was not on the other chart. It picks the bottoms and the tops almost perfectly. And it does that by looking at the future, and then repaints itself. So we don't have that ability when we're trading. So the zigzag indicator is not good for trading, but it is good to identify other indicators that do not repaint themselves, like the MACD, the RSI, and the stochastic. They don't repaint themselves, and if you can find an indicator like that, that gives you good signals, and there's a lot of them, it's worth a try. And you can see here, the RSI was below the 30 and came back around. The stochastic below the 20 and came back around, and the MACD is below the 0. All those are indications that, hey, maybe a trend is reversing, and you could take a chance and do that. All within a few bars of each other. That's the 3 indicator strategies, as I said before, and that gives a good indication. Also, we have that same situation in reverse. We have the MACD, the RSI, and the stochastic RSI, all showing a downward trend. And of course, that big red bar. Oh, look at this. The big E, earnings. I didn't see that before when I first started this video. I did notice a dividend, but I forgot about the earnings. A small surprise over reported and estimate. That's not a real big factor. And the revenue increased. That shouldn't have been that bad. But look, it caused, the market didn't like it, and it caused this big red bar. That's why one of the reasons I like TradingView is to put these big E's and the big D's, which are dividends, out there, and you can read about them. Also, it has a lot of other factors here that you can look at. The technicals say it's a buy, and a target price of 21.21. That's about what it was in FinViz. A lot of this is, and all of this that I just said is provided free. So if you're a beginner, I'd check it out. And there's hundreds and hundreds of indicators that are all free to use. Just got to find your favorite one. Now, another free tool I often use is Options AI, and I use it for the expected move of the stock. You give it the symbol that you're interested in, Region Financial. Of course, there's the trading, what it's trading at now, $19.72. And you want to find out what is this possibility of moving either up or down, depending on what your direction is, and mine is down. The expected move of this over the next month is about 7%. The next 3 months, 21%. It's going to either move 21% over the next 3 months. It's going to move 21% either up or down. I don't know which way, but that's what the market, based on the options and option interest. And remember, there's two sides of where an option, you need to have both sides. Somebody has to take the other side. So it's either up or down. You got to decide yourself. That's trading. And if you're bullish, it'll go up to $20. That's an interesting number. And if it's bearish, it'll hit $18.72. You know, if we could find something that was around $20, I think I mentioned that before, to stay below $20, if we could find an option strategy or trade that stays below $20, we might be in good shape. So putting that information into a little spreadsheet with the expiration out to September 15th, which is a little more than a month, giving myself a little space, I can calculate based on the current price, the target price, and a stop loss. Somewhere in there for a target, somewhere there for a stop loss. Looks like that was about what it was at the start of the trading day. And I've been keeping on saying that I'd like to keep it below 20. Somewhere in that area. As long as it stays below 20, I want to be a winner. And that's consistent with the expected move. So I want to look at a bear call spread, but I can look at other option strategies too that are bearish. And for that, I'm going to go to another tool. I could choose one of these option strategies, but it has to be bearish. And this one I'm going to choose is a bear call spread, and I want to go out to September 15th. And a bear call spread consists of two options: selling a call and getting the premium for that, and I'll get 70 cents. And remember now, when you sell one contract, you have to multiply this by 100, so around $70. And I'm going to buy some protection at 5 cents. And the difference is going to be what I get in my pocket. Cost me $5 for protection. I'm going to get $70 credit, and the net credit for this is going to be $65. In order to do this trade, I have to have a margin account, and I have to put on margin hold, not contracting out. You're just going to make sure you have enough money in your account, which includes margin. And so I have to hold in reserve $300, and my max loss is going to be the difference between this and this equals this. I can lose up to $235, but I'm going to go ahead and look at stop losses and set alerts and things like that so that I don't have to worry about that. And the break even is $20.65. Now it needs to stay below $20.65 to win. And we kept on saying $20. It's got to stay below this to win any kind of money. I think that's doable. $20. It's got to stay below there. This is our profit line area, and this is our loss area. Setting this about between 7 and 8% there, and there's our profit line here. And I'm going to say that, hey, at some point in time, if I get $61 anywhere along here, I'm going to take the profit and get out. If it gets to where I thought it was going to be, an expected move of 7%, I'm going to take the profit here along this way. Well, I'm going to wait, but if it gets to 7%, I'm going to want to take profit. And if it ever reaches my stop loss, which we said it was $20.76, $20.76, right about there. And if it ever gets to that, I want to lose about $40 and get out. Okay? If it ever gets to that point, $20.76. Maybe I got the wrong line there. We're at the $30, $30 and $40. That's what we're going to lose. So you have to ask yourself, is it going up or going down? Is it going up or going down? Based on your fundamental analysis and your technical analysis, based on the excitement of earnings. Earnings, sometimes everybody gets excited about that, and then it kind of creeps up. It gets all panicky and goes back up. But I'm not optimistic for banks, especially regional banks, over the next 2 years. But I am optimistic over the long term for Region Financial. In this case, based on our stop loss, we say our risk is going to be about between $30 and $40, and we're trying to make $60 and get out. That's a pretty good favorable risk-reward ratio. And we're going to be playing this game for about 50 days. We use a strategy called bear call strategy, and we're short. And we think it's going to go short by about 7%. What do you think? Going up, going down, staying the same? Please leave a comment below. Like and subscribe to this video. And it's important to do your own due diligence, find your own indicators you like, learn it, and win. Happy trading.